Welcome to the Lady Landlords podcast, where we empower women to gain financial independence through real estate investing. I'm your host, Becky Nova, founder of Lady Landlords. If you're ready to buy, manage, and grow your real estate portfolio, then let's get started.
Today, I want to share with you the story of my white whale. Now, a white whale is when something that you really want to kind of gets away from you. And there is one property that I have been thinking about since 2021, and the deal fell apart. And I want to share with you why losing money on that deal was actually the best decision I have made as a real estate investor. So what I think is interesting is we always want to celebrate when we close. And I get that. That is an important milestone in our inner circle. We always get to be able to celebrate that as such a big win. But there are so many wins that I feel like we as women do not celebrate. And to be honest, that's really the journey. There are so many things that we can control within real estate investing. But to be honest, there's a lot of things that are out of our control. For example, we can make offers. We're controlling that. But we cannot control if somebody accepts our offer, right? We cannot always control that deal really going to the closing table, even when we did nothing wrong. So that's why I personally find it really important that we're still able to celebrate those moments here. So I am with you. This is not always the easiest thing to be able to do, but I want to share with you today the story about a property that I absolutely loved, that I do not own, and it still eats at me all the time. So I got to take you back to 2021. By this point in time, my husband and I had already bought a multifamily in 2018. We actually bought two in 2019. We bought a property in 2020, right in the middle of COVID craziness. And now it is 2021. And we actually really wanted to keep this streak going that we had of buying a small multifamily property in New York. Now, that property that I bought in 2020 actually changed my buying location purely because of what was happening with COVID and prices and interest rates and all that. We actually switched from buying right outside of New York City in the county right next to it to shifting to purchase about an hour north in the Hudson Valley. And that property ended up being one of our best cash flowing properties. That thing gave us instant appreciation with what was going on, how we bought it, when we bought it. That'll be for another time. We'll talk about that property. But for this one, we want to keep that streak going. So we started looking back up in the Hudson Valley. And I remember we saw quite a few properties there with our realtor. Things weren't necessarily working out. But then we came across this old, like 1700s home. It was a two-family in this small little town, and it was right on Main Street. And I have to say, I have this really big love for very like Americana, old Main Street America type places. Any place that you can picture like the firemen parade down Main Street with all the little kids sitting on the curb or whatever. For some reason, I absolutely love that. I love that area, something that I find very appealing personally when it comes to investing. So we found this two-family in this small little quaint town right on Main Street, USA here. And I loved all of these old features to it. There were two units. One unit, if I remember correctly, it was 2 floors. I think it was a 3-bedroom, 2-bath. It had those very old beams running through the top of the house that you could see. It still had a stained glass window going up on the staircase that was original. There were just certain things that just had these very unique touches to it. It did have older cabinets, but once again, they were in great shape, but it just really gave this house character. That to me would probably be the best way to describe this house, was even though it had some creaks and, some doors that, shut questionably, it just really had this gorgeous character to it. And the woman that lived there did a great job of taking care of the place and really decorated the house very, very well. And it looked great. I fell in love with the unit. It was actually a space where I could see myself really living there down the line years later when my husband and I were going to start a family. I was like, ooh, this could have actually made a really interesting house hack. It also had attached to that larger unit, it had an entrance down to a walkout basement. Now, it was not a legal basement that I could have rented out, but it did have then entry right onto the sidewalk, right on Main Street. It would have been interesting if my husband and I decided to start like a small business, right? That would have been a great opportunity just to open the doors, maybe an office for me. It could have been something where we could have sold things right out of there. It was a perfect setup really for almost a commercial space underneath us. Then through another side door, it actually had then that second unit. The second unit was smaller. It was a 1 bed, 1 bath. It almost was like a cottage. It wasn't a traditional duplex where they were like attached and shared like a wall. It would almost be like you walked into a vestibule for one unit and to the right to the other unit. But outside of that, they weren't attached. Same thing, the single unit that was there was actually the mother of the woman living in the other side. So really grandma kind of lived on that side. It was a really great setup. She was able to help with the mother's kid, but yet they had their own spaces in that space. They actually wanted to stay. So we looked at this property as that turnkey opportunity. And to be honest, I love turnkey properties because that means no work. That means there's no updates that need to be done. People are living there. People are happy. And best part, cash flow on day one. At closing, you actually get a check for the tenants that are currently living there because you have to get handed over the rent for the rest of that month. So this to me was already exciting. Once again, we were just coming out of the pandemic. Building materials were very high. Finding contractors still a little bit difficult, and we were just really expanding into this market. So I was really looking for something that did not need a lot of time, energy, not a lot of TLC. So this really fit that. There were absolutely some updates that needed to be made, but once again, that would have more been something that once people had moved out, we would have looked at that. I remember this mother and then grandmother saying to me that they actually wanted, I think it was like a 2-year lease or a 5-year lease. They wanted to stay, they wanted to be locked in, and that was something that they were truly committed to. So that already to me was incredibly appealing. Numbers looked great. I personally usually look to get at least $500 in profit per door. Now I'm in a higher cost of living area. I can command higher rents. I was putting down a large down payment. So that is one of the reasons why I was able to get what that profit would look like. Okay, so once again, results may vary, especially depending on where you are located and what your financing looks like. But for me, that's what I was looking on for this property. So that would have given me about $1,000 a month coming in from this property. Once again, this to me was like a steal. I feel like it would have been like $1,500 or something closer to that this property would have been bringing in. I was in love with this property. So that was our plan for it. We ended up putting the bid in for it, and surprisingly, it came back that we did not get the accepted offer. And I gotta say, I was a little hurt. I was hurt by it. I guess upset maybe was a better word for it. I thought we really did a great job with our offer, with the things that we were willing to waive versus not, especially once again in this post-COVID world where a lot of people were fighting with these low interest rates and where sale prices were at that point in time. So I thought we were very competitive, but nevertheless, we did not get that property. So we moved on, right? I tried to kind of forget about it, but I just remember being like, what a cute place and what a perfect location for it. And we have actually been able to do well with getting accepted offers on other locations because we are willing to accept tenants. We were not looking to move into the property. We were not looking to have both tenants vacate. So that can actually be a really good strategy for trying to get an accepted offer if a seller doesn't want to have to make people move and vacate those units. So what I mean by that is if somebody else was coming and looking to do owner financing, they would have to move in, which means the seller would have had to kick those tenants out, or at least one of those tenants. And once again, with the mother-daughter situation, this can get dicey, right? The mother in this unit actually had a copy of an inspection report for it, which was very interesting to me. And I remembered she and I exchanged phone numbers. And I remember she was messaging me about like, oh, well, there's like this problem and there's this problem. And I got to say, I got to a point where I was just like, this woman knows a lot about this property. I remember her talking about how like she felt that the seller was doing things that were incorrect and therefore she didn't have to pay rent, and started to get a little bit more scared of what was going on with the tenant situation and what the communication was with the landlord. And I started to wonder if she was actually behind in rent, either from a not able to pay or even a just withholding rent situation. I had the feeling it was more around that side of withholding. But either way, we kind of ended communication because at that point in time, the seller decided that they were going to go with another offer. And that other offer was actually owner financing. So it seems that the sellers took a higher number and the risk of having to move these tenants out at that period of time. And that's okay. That was completely their choice, but they wanted a much higher number with that idea of having to get those other tenants out of that property, which honestly could have probably cost them more. Well, didn't think anything about it, kept moving on with other properties. And I remember I was actually on a boat in Wildwood, New Jersey with my uncle and my husband, and I got a call in the middle of the ocean. I'm actually really surprised my service works, so shout out to T-Mobile there. But I got a call from my realtor a few weeks later and said, hey, owner financing fell through. We were the backup offer. Congratulations, you now have an accepted offer on this property. And I was so excited at that period of time. One, because I didn't find anything else that I really liked as much. I didn't find anything that had such a great cash flow. But I just remember being so happy. Yes, we are keeping our streak alive by buying another small multifamily now in 2021. And I loved this property. But the tenants that were there, the mother-daughter, they had actually moved out. By this period of time, the seller had already informed them that they were selling the house and they had to leave. So now I'm buying this property that I thought was turnkey and needed no work. And now I have two tenants that are leaving in an angry form. I'm not sure what condition this is going to be in, but I'm now going to have to do some of those updates. So I'm kind of going back through my numbers. I'm like, okay, this was not what I was planning, but we can make this work. I can do some of those upgrades and get that rented. I'm going to have to deal with that cost of vacancy here. But I went back, reworked my numbers, still happy with what my numbers and my ROI was looking like on this. So here we go, we move forward. So we are now in contract. If I remember correctly, we had sent in for our deposit. Once again, we were putting down, I think, 25% on this property. But as is typical, a contract signing, you put down a lower amount for your EMD, your earnest money deposit, okay? That's the money that here in New York that you pay when contract is signed, and then you pay the rest of the deposit at the closing. Well, one night, right after we did this closing, right after we did the contract signing, we realized that I remember my husband said, hey, I just saw that the property that we're buying went back on the market on the MLS. And we're like, well, that makes no sense. We're under contract with these people. It was probably like 10 o'clock at night. But still, I messaged my realtor and said, hey, what's kind of going on? My amazing realtor answered. I think we hopped on a phone call that night. And he's like, let me call the other realtor. Let's figure this out. It makes no sense why they're saying that this property is now available when you guys are under contract. And I'll never forget, he called me back and he goes, the sellers and the seller's agent have no idea what they're doing here. So I said, why? They didn't understand what EMD was. They felt that we did a bait and switch by stating that we were putting down a 25% down payment and then only were putting down the 5%, which was what our agreed upon terms were within our EMD, within the earnest money deposit. So they felt that we were then not financially secure, just like the deal that had fell between. So my realtor now at like 10 o'clock on like a Friday night is explaining to the seller's realtor what EMD is, which is a very basic term for a realtor to still know. And then they had to go back to the sellers. So you could just tell from this point that I was like, communication's not going to be good. They don't have good representation. They don't have a good handle on what this sale is really looking like, but that's okay. I felt comfortable with our realtor. We'd already bought a few properties by this time. We could make those things work. So a few days later, we had the inspection. Now, our inspector, my home inspector, I got to give Mark Anthony a shout out, not the singer, but also the same name as my home inspector. We actually have another episode of the Lady Landlords podcast where I interview Mark all about home inspections. So I'll make sure to go through and link that down in the comments so you can listen there and learn more about home inspections. But our home inspector, we'd use multiple times for rental properties. He actually has rental properties himself and really was able to guide us through the inspection, not just, hey, we're buying a house, but really what to look for as investors. He was really a mentor to us, which was fantastic. And at that point in time, doing the inspection, there was a problem. And it was downstairs in that cute little extra bonus space that I so pictured opening some type of business and selling things here on my Main Street America. But He had said since the house was so old, it was actually built into the side of a house and there were foundation issues. Now, that was a new one for me, but foundation issues never actually sounds good. So, my very basic, simple question was, well, I mean, what are you saying? Like, is the house going to fall down? And he said, well, yes, the house is going to fall down. He goes, but I can't tell you if it's going to fall down while you own it or 30 years down the line when you sell it. We needed a structural engineer. That was actually a really hard thing to be able to find. And since this house was built into this hill, and the hill over time, over years, the land had shifted, the hill was pushing into the house. So if you're watching me on YouTube now, you can kind of see I'm explaining with my hands that the way that the hill was pushing into the side of the house where the house was built into, it was making the house lean more and more. So luckily, through contacts, I was able to talk to a structural engineer. By the way, a structural engineer, that was so expensive to get just an estimate on what the problem was. Because they really said they would have to come out, really do, in basic terms here, do some markings, and then come back down the line in like, a month, 2 months to be able to see then how much more that hill had shifted the house past those markers. So then that way they were able to calculate out, okay, based on in 2 months the house moved half an inch. Well, that means in, 15 years, the house is going to be on its side, right? There was some type of math that was going to go into that. But one, we're under contract. We can't now do this study to see how fast the hill is shifting. And two, even to do the study was like a 6-figure number. So we had to make the decision to walk away from my white whale. It was very hard to now say we had already paid the attorney for this to drop the contract. We had already spent time with the lender to get pre-approved. We now were already in that process of getting the full approval for our loan. We paid for the inspection. We paid for multiple trips up there. There was a ton of costs that already kind of went into this that I was not going to get back. But at the end of the day, our experts around us and the real decision to this was we needed to walk away. To me, personally, the way that I grow my portfolio is foundation now became a deal breaker for us. We had certain deal breakers at that time. My husband refuses to see a property that's even in a flood zone. If that's something that will be impacted or we need to deal with flood insurance, there's nothing I could do to even get my husband in the car to go look at it. Ladies, trust me, I have tried, but he's absolutely not. But this now foundation and this type of work rehab that there was really not a solution to because of the fact that it was literally just the earth moving was really a deal breaker for us. That was a place where we really got uncomfortable and it was hard to walk away. I still think about just how cute this property was and how great the location was and how well like it could be decorated and really what like a great home and a great setup. And I still loved that situation of both first floor units, no walls being shared, and thought it was really great for this idea of this multi-generational family there that I knew that it would have done great and it would have continued not only to appreciate. I think back to 2021 prices and 2021 interest rates, and I'm like, man, that would have been probably one of my best cash flowing properties, but not if it gave us all of these problems. And I wanted to share this story today because I think it's incredibly important for us to not change our buy box, to not chase properties that are not going to be the right one. Inspections are there for a reason. And inspections are there for us to be able to review and say, hey, now with this information, have the knowledge I need to know that I can proceed comfortably or that we need to walk away from that. And unfortunately, in this case, we saved money. We were able to avoid probably what could have been a financial disaster for where we would be today if we had bought that property. And it's just a reminder to trust your team, do your due diligence. And it was hard. My husband will admit it too. It was hard to be able to break that streak and have to say, that's it. We're going to not move forward with this property, especially if we lost it the first time by not getting the accepted offer. We really thought it was meant to be, but unfortunately, it just absolutely was not. But I always do feel like the universe rewards us. And I do feel that when we had to say no to that property, something better did come along. And next week on the Lady Landlords podcast, I'm going to be sharing with you the story of the best investment I ever made. And it wasn't the most expensive. It wasn't the biggest property I purchased, but that property pays for the lifestyle I have today. So please do make sure to hit that subscribe button so you do not miss next week's episode, as I'm sure that is one that you're going to want to listen into. And I will see you all next week on the Lady Landlords podcast and back in the Lady Landlords Facebook group.
Thank you for listening to the Lady Landlords podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlords.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.